multinationals is they park this money early in the day, or to make sure that the money's there. And now you can do it just in time. So if it's Friday night, if it's Saturday morning, you could send money. And the interesting thing to me is we started off with liquidity and payments being our thesis statement to solve for our clients, but we've now seen it go into the cap markets with, recently it was Chinese New Year in Singapore, but we had a client that wanted to settle US equities. So, again, they would typically forecast for what their margin calls are going to be, what their kind of cost of funds were going to be in that market. Now they can move it instantaneous. So we've targeted our large money hubs first, which is US, UK, Singapore, and Hong Kong. And those are the ones that have the largest cutoff, as well as the largest amount of friction. We move on a daily basis somewhere between $4 and $5 trillion for our clients, but there is friction in the traditional market. So we've kind of taken a two-prong approach where we are updating our traditional infrastructure with solutions like 24/7, Spring by City, real-time liquidity, but also looking at more innovative structures that are using emerging technology like Citi Token Service to be able to provide that access, transparent, and liquidity for our clients.
So it's live and it's saving the bank money.
We have dozens of clients on it, moving multi-million transactions 24/7. And as I mentioned, it's really interesting to see, where the platform is going. And everything we do is dictated by our clients. We build for our clients, by our clients. So every additional hub that we add, every additional currency that we have is really mandated by them. And, we're seeing them not just use it in off hours. Our thesis statement was that it would be used when the branch was closed. But we have large clients that are just using it for, real-time settlement instead of having to do batch settlement at the end of the day to reduce costs for, reconciliation and stuff. So yeah, it's live.
Lovely. Mike, do you want to talk about securities on-chain from the prime broker, through the prime broker lens and all that stuff, collateral and all that stuff?
Yeah, sure. I think, can you hear me okay?
Yeah.
Yeah?
Okay, yeah.
Sorry. Look, being able to move value 24/7 has a huge impact, not just on the crypto space, but in traditional markets as well, right? Really upgrading that infrastructure. And that's ultimately going to change the way commerce is transacted. From the lens of a PB, traditional PBs operate in a T1 and a T2 cycle. In digital assets, we're already at T0 and instant finality, right? So these solutions will leapfrog traditional prompts. So going through the lens of PB, the biggest knock-on benefit is actually on the risk side of things. If you think about what we do, we give access to counterparties, and we require them to post collateral based on their portfolio and all the assets that make up that portfolio. The math behind the margin methodology of how much collateral they need to post is based on and calibrated on what are the assets in the portfolio, the size of those assets in the portfolio, but also the ability for a client to top up margin and meet collateral calls, right? Cure periods form part of the legal framework and are part of your risk management. And so being able to ship assets 24/7 reduces the risk from a PB and shrinks what's called your MPOR, your margin period of risk. And so the knock-on to that is prime brokers are able to price that more aggressively from both margin as well as fees. And so that makes it cheaper or ultimately more efficient for counterparties to trade those assets. And if it's more capital efficient, then the treasurers can hold more collateral and generate more yield in corporate treasury. So ultimately, tokenizing assets improve 24/7 margining, better real-time risk management, and better settlement windows, which leads me to the point of who benefits from it. So certainly the prime brokers have less risk, but if you think of the proprietary trading firms or the high-frequency fraternity, they can reuse their capital over and over. And then the big hedge funds or the long-onlys, they need to post less collateral, and so again, earn positive carry by holding that in corporate treasury. So big step forward.
Nice. And the Ripple deal. Do you want to? In the context of securities online and on-chain and all that stuff. But I used to report on who's going to be the main crypto PB, and there was lots of companies jostling for that position. Who's going to in that? But tell me about what Ripple's going to bring to you guys, and also what you're going to bring to them.
Sure. Yeah, I think it's definitely both sides. But I think it's important to take a step back, right? Prime brokerage, clearing, and margin financing has really been a facilitation business built into banks over the last 30 years. Since '08, that's a sub 5% return on invested capital. And so you can see this in a number of areas. The number of FCM, GCMs on a CME in 2008 was 153. There's 61 left in the world. Citibank, the largest FXPB, kind of puked out that business, and there's a number of these themes. And so Hidden Road was set up to be a multi-asset, non-bank prime, and there was 3 pillars to do that. The first was rewrite the technology. Banks are organized very vertical, right? So you have a clearing system for equities, a clearing system for foreign exchange, a different clearing system for listed derivatives, and certainly nothing in the crypto space. And so we wrote a single horizontal clearing infrastructure using modern technologies, and that's important. It allows us to manage risk, cross-asset, cross-process, real-time, 24/7. The second was get the entity regulated by market regulators, and so we've done that. And the third piece is to the point of Ripple is, well, how do you fund that business? Banks have been predicated on, rehypothecating client collateral to fund prime businesses, which is part of the reason they have punitive capital charges under the likes of Basel III. And so we looked at public markets versus private markets and said, right, we'll fund it with private credit, which has been funding businesses. We took about $500 million and deployed that. We ended up with a supply-demand problem. And so late last year, we said, right, time to solve that supply-demand problem. Let's go look for capital. It coincided with the change of administration in the U.S., which had a positive tone in digital assets into our business. And so the conversation with Ripple was very organic. They were a user on the platform, and when we looked at it, having access to that balance sheet and that treasury would allow us to really deploy material capital in traditional assets. And in the crypto space, that infrastructure has not really existed. And so solving that gap to put real balance sheet in the digital asset space will allow real, true institutional adoption. So that's on the Hidden Road side. There's 2 knock-on benefits. One is we'll be able to lend a little bit more XRP, and 2 is Ripple's stablecoin made its debut end of last year. And so being able to use that as good collateral and accept that on a 24/7 basis is a major step forward. Looking at it the other way, Ripple's an L1. And so, getting more assets on chain is a big important piece. Hidden Road runs a very large traditional market business. So cross-border payments and foreign exchange, we do about 30 billion a day. And then our fixed income business, starting with repo, being able to move that on chain are things that we're looking at collectively. But exciting development with Ripple.
Sorry, did you say XRP is going to be used as collateral?
Well, we already accept digital collateral as good collateral, and I'll give you a really good example. Today, there's many firms trading basis, right? So they'll trade Bitcoin spot against CME front-month futures. None of the bank FCMs, or even non-bank FCMs, can take Bitcoin as good collateral and finance span margining on the CME. Go back to XRP, you have ETFs that are there, you have CME futures coming online, and so taking XRP spot as good collateral and providing finance against it is certainly part of the playbook, and I think all the trading firms out there will benefit from that.
Great partners. Ryan, I used to write a lot about enterprise, sort of blockchain, old, in the crypto space, and there's always the idea of public versus private, and the banks are more comfortable on sort of very private blockchain, some of them. But this seems to be changing. Do you want to talk about where we are now with the public versus private debate?
Yeah, it's definitely been a journey. I think back to 10 years ago at R3, and when we initially started our journey in that space, we were looking at Ethereum and different public chains, but due to the compliance, KYC, AML sanctions that large enterprises have to abide by, we couldn't be on the public chain. So hence why at R3 we built Corda, and you've seen other kind of private permission versions of platforms kind of evolve since then. We are on a private permission version of Ethereum because, that was all that was compliant for us. Like, Citi's not going to operate in the gray area unless there's clear legislation and rules and regulation about being on public. Like, large enterprises like Citi can't do that. So I think that the technology has definitely matured a lot in the last 10 years, but we still do see vulnerabilities and like bridges and the whole interoperability between different public chains. So I think that it still needs to evolve, but In the meantime, we are on a permission version of Ethereum with the aspirations of, depending where regulation goes, to make sure that we provide the best services for our clients. So I think it has developed a lot, and I think more to come kind of out of DC in the next, hopefully, couple months.
Really great. And talking about the kind of cash leg tokenized, we used to report on JPM coin a lot. I know that JPM have changed. They've rebranded it. Nobody wants to be a bank coin, it's not. And actually, going way back, I actually did a story about Citicoin because there was a kind of proof of concept, let's just say. Because I remember I did that story in 2015, and I know that you don't do a Citicoin. It's a Citi token services. But the question is, interoperability between banks. You talk to the JPM guys. I know you work with them, Project Guardian and stuff. Where are you with interoperability?
I mean, we already started. We started with the network play before we actually had Citi Token Service. So we were working with the Fed on the regulated liability network way before we even had a Citi token. And we've made some very different design decisions. When I was at IBM, I advised a bunch of different banks in this space, and you don't need a blockchain if it's just going to be an internal token. We've always had aspirations of connecting externally. And the thesis statement that our clients want is they want multi-bank, multi-border, multi-currency, always on liquidity and payment. Why does money not match the speed of the internet, right? So how are we going to get to that evolution? And it is going to be multi-bank. It is, and we're part of several initiatives that are working on this and trying to drive that forward. But, I also believe success breeds success. So, right now, being able to be live and adding value to our large multinationals that operate on a 24/7 basis to be able to move their cash across our 90+ branches actually adds a lot of value to them. It adds a lot of transparency and value, and they don't have to, forecast money to the different regions across the globe, that they can just do it instantaneously. So yeah, I think interoperability is important. We're actively involved in several initiatives around this space about, and I joke with the team, if I had $1 for every network that approached me to join, I could retire. So it's definitely been on the forefront of our mind.
I bring it up because sometimes I got the feeling that JPM were not quite so into interoperating with other. I mean, someone said to me that interoperability and capitalism don't mix, which is a sort of interesting. Anyway, going back to on-chain securities, BlackRock, Biddle, that fund, Mike, that's been a huge success. Tip of the iceberg?
Completely a huge success. I think, don't quote me exactly on this, but I think in the first 2 months it amassed an AUM of about 500 million. I think we're closer to about 2 billion. But it's the play on, or piggyback on what Brian was just saying, right? It's the ability to move collateral 24/7. But one of the key components of this is moving collateral that pays positive carry, right? Like gold is a non-carry asset. So if you look at investment portfolios, gold is a small portion of it, right? It doesn't pay interest. Large shareholders of gold are actually are the central banks, similar to Bitcoin. So we'll see if that unplays. But going back to BlackRock's 2A7 funds tokenizing this collateral, I think it makes a lot of sense. You can meet collateral calls around the weekend. You'll see the Templetons and the Vanguards and the rest of these funds start doing it. Their infrastructure really allows them to do it. So certainly tip of the iceberg. And again, it improves the ability to cure collateral around 24/7, and that ultimately will improve cost and for counterparties. So yeah, early on, but very exciting.
And beyond tokenized money market funds, which obviously there's a lot of people involved in that world. Ryan, I did a story recently about Citi, and they're doing pre-IPO shares. And interestingly, going back to R3 and the R3 guys, who are great, by the way, they work with SDX, the Swiss exchange. So where are you guys at the bank looking beyond money market, other things, credit, stuff like that?
Yeah, so our issuer service business, as you mentioned, recently formed the partnership with SDX on, later this year, having the access to pre-IPO shares. I think it's, to our strategy, and similar to you, it's build, buy, partner. We're not going to build every solution out there that our clients want. We are building Citi Token Service. I think it's foundational to be able to move, cash around instantaneously instead of having to go back to TradFi rails for our clients, but also partnering, and right here, our clients want access, transparency to, pre-IPO shares. So being able to partner with an organization like SDX to do that, and I think that's going to continue in this space. These partnerships with large enterprises, as well as, our venture cap team has a big book within this space also that we're going to invest in these companies also, because we're not going to build every solution out there, and I think that's important for the future.
Really good. And Mike, where do we draw the line? We're going to tokenize everything that's got any kind of value.
Yeah, I think it's simple. I think you look to tokenize, at least today in this world, before we move to a 24/7 market, which is going to happen, and then things should, virtually all tokenize. But today you look at, does it make it more accessible? Does it improve liquidity? Does it improve transparency and operational efficiencies? And so, we've started with the money market funds. You have stable coins. I think private credit is important because you'll have better tracking of IRR. Repo, I briefly mentioned, Brian already mentioned, that's a big space, right? That will improve capital efficiencies, liquidity for intraday liquidity, not 24-hour periods. I think that's where we start from. But I think if we think, fast forward, if markets move 24/7, then having collateral that, is recognized as good collateral and to be able to move that around in line with those markets, I think is hugely important. So we're at the very early start of this.
I hear people talking about tokenized real estate. It's been around for ages, like an apartment block somewhere. But Ryan, you guys actually did some proofs of concepts, explorations, with land registries and stuff.
Yeah, when I was at R3, we were working with, at the time, state of Illinois on a land registry, because the way they explained it, some of these land registries that they have within the state, if a tornado touched down, literally the whole entire land registry would be wiped out. There was no digital copy of that. And, why do people have to do, title insurance and the whole title effort? So being able to digitize this whole entire process, working with the state on that. But one thing I'll say overall about tokenization of different assets is a lot of what I've seen is if there's a shadow ledger or a shadow, like a regular, the system's not going to be the system of record, and you have to go back to the TradFi rails, it's not going to work. It's created conflicts, and I have seen some solutions, but a lot of them haven't scaled when they have to go back to the traditional rails. You're just kind of creating, two shadow systems. So I'd say, natively issued assets onto the ledger, onto the blockchain, are much more efficient, and I've seen scale better.
Really good. And last sort of thing, I guess, regulation is coming. US, Europe, slightly different. But I'll start with you, Ryan. What's your view on where we're going under Donald Trump?
I have to say I'm very optimistic about this new administration. The last EO that was issued under Biden, I was working for IBM, and I got to go down to the White House and speak, and they were much more reluctant on the technology, believing that it was going to be, kind of critical infrastructure for the future. Where now I'm down there and, advocating and working with our bank reg team about, equal legislation for equal risk, equal activity. And they really are open to these conversations. And, I'm very optimistic by the speed that these stable and genius bills, even though we had a little stumble, last week, that they're moving, that, I want to make sure that, large enterprises like Citi have ability to have a seat at the table if our clients want it.
And Mike, last thing, is there a significant risk maybe from having everything on chain, everything whiz bang on a blockchain? I don't know, I sometimes wonder that maybe we could be stumbling into a black swan event or something down the line.
Just to comment quickly back on the regulatory side, I'm pro that, but my fear is that we try to shoehorn this new asset class into existing TradFi regs when that may not be the opportunity to create something new and unique. But the Stable Act, the Genius Act are really important on the stablecoin markets to get that certainty. If you look at that market cap today, it's less than 250 billion. I think those stablecoin issuers will become very large holders of U.S. Treasuries, and the U.S. government likes that. And to be able to export dollars around is really important. But I think the approach we should take is probably like one where we did in the early stages of the internet, right? It's a pro innovation, light touch regulation. I think that that is key. But yes, I mean, there is real risks of putting everything on chain. You've seen lots of hacks in this space. We're getting, much better at those things, but yeah, I'll pause there.
Yeah, I think we're almost at time. Do you see? Are we heading towards another black swan event in crypto?
It was actually interesting. Right before this panel, I was having a conversation with a law firm that is actually, litigating for one of these big hacks. And it is completely different environment. The speed, the transparency, within minutes, the whole entire market knew what happened. And typically they are able to, not release the information to media right away. It's completely changed. So I think the whole dynamic of the market and the speed and transparency that this adds is changing the way financial services can be done.
Well, listen,
Bybit was a perfect example of that, right? The hack was immediately known.
Yeah.
If you think about, 2008 and Lehman Brothers, you didn't know what was happening for days. We knew pretty quickly. Ben was out there and, and solved that, right? That's hugely important. So I think there's more positives to this than drawbacks.
yeah, the Bybit hack. And OKX on hand to launder the funds. Anyway, both great sports. Thank you so much,
Ian.
both of you. Really appreciate it.
Thank you.
Thank you.